4 stocks I am buying right now. 2 of them very interesting and new positions in my portfolio. One of them a new position in my challenge portfolio that I just added a lot of money into. So let's go over these 4 stocks and let's not waste any time. These 4 stocks I am buying, I'm going to be showing you for several reasons, whether it's a technical setup, momentum play, fundamentally I think it's a strong company, or whether I just see more room in the stock going up because of other investors that are buying up the stock, basically RSI and other indicators that I'm looking at, mainly technicals. Okay, so let's go into the first stock, which is going to be SoFi. SoFi stock I am up a good amount of money on. I actually ended up buying some more shares, so my dollar cost into the stock actually increased my average cost, which is okay. It's a myth that you have to dollar cost into a stock for cheaper than your average cost. That is a myth, right? If you like a stock, you can dollar cost average into it and buy more of it, even if it's higher than your average cost. That's completely okay. This company not only has a very strong business, it's also looking technically very strong right now. So let's show you here what happened over the last 5 days. Pretty insane, right? Pretty insane. Just, I got no words, man. This is why you always want to buy the dip. This is why you want to buy stocks that come down, especially if they're high quality companies. You know, I'm sorry, but if you sold it right here, you don't know what you're doing. Straight up, sign up for my coaching. That's the clearest ROI you'll ever get in your life. If you ended up selling SoFi at all within the last even 6 months, if you're not a buyer or a seller, yeah, just you need help. You need a lot of help, right? But if you've been buying SoFi, that's good, but you still might need help because you want to understand when to get in and how to ride this stock properly. There's a few ways to do it. You can do it with leap options. You can do it by selling put options and jumping in. I sold put options and I got a sign, and I'm happy about that because I've been making really good money on SoFi from getting a sign. Now look at the 6-month chart. 6-month chart absolutely insane as well. And now we're pulling up very quick. So you're about to miss out. If you're not in this stock, you're going to miss out because I think what's going to happen, right, technically is we had a peak here around $32 per share. If we can surpass this peak, if we can like reach it, which might happen within the next 30 to 60 days, then we're probably going to hit a new level of like $35 per share. I think this is going to happen because SoFi's financial matrix is super strong. Like they get you in the door, and now people are realizing how profitable it is for SoFi as a business after they've acquired the customer to upsell them on more products. That is the biggest number that I have seen grow for SoFi. And this strategy of growing and getting members in the door and creating this flywheel effect of starting with one product and then upgrading to like 2, 3, 4, 5 products is what I call getting a customer like a child support payment, right? Once you're in because they have personalization that will basically make it a good experience. So I'm not saying they're like manipulating. They are manipulating, but in a good way. They have personalization and a data advantage. So they're using data to acquire a customer, right? They're really good at acquiring customers through sponsorships, partnerships, SEO heavy content marketing. But once they got you in the door, man, they are upselling you like crazy. They're like, sign up for the credit card, sign up for a home loan, sign up for investing, right? And this increases their value of the customer, okay? So there's just really easy part of a business is there's only 2 real parts, right? It's marketing and sales. There's a lot more to SoFi, but nobody cares. No company cares about anything really. They don't care about product. They don't care about you really. What they really care about is making money, and that comes down to sales and marketing. That's literally the 2 things that every single business does. Whether it's a YouTuber who's doing webinars and trying to sell high-ticket courses for $10,000, whether it's SoFi trying to get you in the door, whether it's Robinhood trying to make you open up an account even though they look free, right? Robinhood is not free. They make a lot of money off of you. Every business out there, even if it's free, is making money on you, either directly or indirectly. SoFi is amazing at that, and they have figured out how to basically compete very well in finance because they have a banking charter and they're doing extremely well with gathering a lot of traffic and converting that traffic and then personalizing and engaging with that traffic. One way is email marketing. So this is a reason why you want to be invested in SoFi, not to mention obviously like their revenues were really good, like $961 million. They're almost, not there yet. They're almost at $1 billion in net revenue per quarter. So any quarter now, man, we're freaking close. We're really close, right? I've been in this stock since, you know, the market cap was like 8 billion, 9 billion. Told you it's going to be 30 billion. Now we're at 35. So the next step is really 40 and 40, not 45, 40, well, obviously 45, but big milestones would be 40 billion and then 50 billion as well. I think that's possible in 2026, which is why I would be invested in SoFi for 2026, right? Going into 2026, I think if you're not invested in it, then you're missing out because this company is pushing out LTV of over $1,000. LTV stands for lifetime value. I went to college for business, for finance, economics, analytics. Those are my kind of three majors, and I had a lot of experience on Wall Street. And LTV is a very important metric that I personally look at when I'm looking at a business. Right, two things that make me a better coach: risk management, and then focus on a long-term business, and that's what helps me pick options on that business. Option trading in itself is not super difficult. Like I have a free course here on YouTube. It's a 6-hour course. Just go to my playlist, and I have several courses. I have a retire course, a 6-hour course, a wheel course, sell put course, and covered call course. Although that covered call course, I need to do a new one soon, but it's still good, right? I have 5 courses. You can learn everything for free. My free stuff is better than people's paid stuff, right? Other YouTubers that learn from me that are making videos, right? I'm not going to put their names out there, but a lot of the guys that you're watching, they came through my program. The men and the women on YouTube, a lot of them came through my program. I'm not saying this to put them down. There's a lot of good coaches out there. I'm just telling you, my free stuff, you don't have to pay for things. I have amazing free stuff. So look through my free stuff, educate yourself on option trading, because if you understand option trading and then you put that piece of the pie with picking the right stocks, that's your retirement formula. Simple, that's your retirement formula, all right? So let's go into my second stock, all right? We talked about the first stock, which is going to be SoFi. Second stock is going to be Navitas. So this is an interesting play, right? Keep it small, man. Keep it small. This is a new play I'm talking about on YouTube, so I don't want to see the YouTube comments. Hey, I put all my money in this and this thing went down. Look, hold up, please. Just listen for 1 second before we get to third and fourth stock. Let me properly help you on understanding new investments you might make on how to be safe with them, because you have to understand you need to be safe unless you have a professional, and those professional advisors don't even give the best advice per se. But I have to legally tell you, I'm not a financial advisor. I'm is educational purpose only, seek professional help. But let me tell you how you should do this if you're not going to go seek that professional help, which I think is kind of BS anyways. But that's my opinion. Have proper position sizing. Please do not put too much money into a smaller account play like a market cap under 5 billion. Any company under 5 billion does not deserve, that's right, does not deserve 5% of your money. Okay, you should go small. Go small, because this is a small market cap. Okay, now let me talk about why I like it. Okay, company ended up blowing up, and I know it was a little bit popular on YouTube, so I started to kind of look into Navitas and why it's popular, and I think for good reason, because they make advanced power chips that control how electricity flows inside of devices. So these chips replace old school silicon chips. They're more efficient, they're smaller, they're faster, and they're cooler. So companies are using Navitas chips to build better electronics. Where their chips are used is in a lot of places, right? Number one is fast chargers. So that's phones and laptops, right? So their chips let a charger be smaller, faster, and not get as hot. And that's a big one since, when things get hot, it's not good because then there's like risk of fire, etc., right? So think of it of a 30 to 100 watt fast charger. Many of them are using GaN technology, which is basically gallium nitride, right? So it's a special material used to make super efficient power chips. Now, these chips control electricity inside of electronics, phones, laptops, EVs, that's one, and data centers, etc., right? EVs and data centers, very, very big, right? EVs specifically, they're really huge, right? So Navitas chips help charge faster, which is really important if you look at EV vehicles. Obviously, you don't want to wait there too long. Increase driving range, reduce heat. That's very important, especially some of the cars that are driving out in hotter countries, right? Hotter regions. And then they also make parts lighter, which is, again, very, very important for efficiency. So the world is moving from old silicon chips to basically gallium nitride, so GaN, and that's a big shift. That's a big shift. Navitas is a small company, so again, don't put too much in it, but if they win, there's a lot of room for upside, a lot. Like this company has a huge upside, but will they capture the entire market? Probably not. Will there be problems along the way? Definitely so. So small play, I'm looking into myself, okay? Obviously nowhere near as big as my position on SoFi. Next stock is going to be IREN. So I'm going to go to my portfolio right here, and we're going to go into my challenge portfolio, which is actually doing really good. It's actually doing really, really good despite some of the volatility in the market. I started with $100,000. Doing pretty good, okay? doing actually very good. IREN is a position I did invest a good amount of money into. If you want to be up to date, by the way, with all the plays, I make all these plays live in my Discord community. When I'm trading, we have a very amazing community where members can watch me trade, understand why I'm making certain trades, and follow along with my challenge. So if you want to be part of the challenge, schedule a free consultation and tell them specifically, I want a discount from Henry's YouTube for a challenge. I want to follow along, okay? So my goal is to take a $100,000 portfolio, into multi six figures in a very reasonable amount of time, right? Again, I've been having some issues with YouTube. So, if you want more information, just schedule a call, because if I say too specific of numbers, YouTube doesn't like that, okay? But I'm going to take this portfolio to some freaking, you already know, bicep over tricep levels. Levels that are going to make you stupid rich. Levels that are going to make you closer to retirement, okay? That's the goal. IREN, I really like this stock for a lot of reasons. One of them is IREN is a company that builds and operates data centers. Data centers are super hot right now, and they build data centers that are powered by renewable energy. So they started as a Bitcoin mining company, but they're also shifting into something much bigger. So now they actually rent out data center space and computing power for AI companies. So think of IREN similar to a giant warehouse full of computers powered by cheap and clean energy, which is cool. I like this company a lot. The company uses, other companies will use these data centers and IREN for AI, GPUs, cloud computing, or really any digital workloads. So right now there's a really nice shift, obviously, into AI, and AI has been a thing for a very long time, and we're in the AI era. So this is why I want to be in companies that benefit from data centers, IREN being one of them. So I actually went pretty heavy in my portfolio with IREN. I'm not going to lie. I broke some risk management rules, and I'm not gonna explain that on YouTube, but I went into great detail in my community on why I broke those rules. And so far, portfolio has been doing very, very well from breaking those rules. But again, be careful, right? So they have very cheap and clean energy. So the data centers are located near hydropower in Canada. So it's basically like cheap electricity, which is very important for both Bitcoin mining and AI computing, and they're building huge GPU and data center capacity in general, right? So IREN is adding tens of thousands of GPUs, more power capacity, and this makes them really similar to actually some other companies out there like CoreWeave, Lambda, Crusoe, and Hive. So there's some competitors out there, and there's some similarities. But what I like about IREN is that they've actually signed a massive deal with Microsoft. So IREN landed a multi-year AI infrastructure deal worth $9.7 billion. This was a huge credibility boost. I really like when a company has great relationships, because that's part of the reason why I invested in Palantir when it was IPO. I already knew they had great relationships. Palantir CEO went to my high school. He's a lot older than me, but I know that he had great connections and that the man's smart and he knows what he's doing. So I was really interested in Palantir and ended up being a great investment. And I'm kind of trying to be early here, and I think IREN's an interesting one as well, that I'm certainly investing my personal money into. And part of my challenge, I trust a lot of money in IREN, and I'm selling put options for optimal entry. But I also have shares of IREN as well, right? I have several hundred shares there. So I'm not going to be talking about IREN as much on the channel. It's kind of more niche content that not everyone will be interested in. So if you want to follow more along, you already know where to find that. You can follow along with my challenge live. Now let's get into my fourth stock. All right, next stock is going to be Chipotle. Chipotle is very, very interesting. Now I know, like the stock is down, and a lot of restaurant stocks are down, and I had a small position. I mean, my Chipotle position, let's take a look. I think I'm around 1%. Position sizing, super important. If you are like, oh, I'm down a lot of money because you don't know how to do position sizing, you're not part of my community. You don't know what kind of position sizing I got because I can't put up the trades all the time live on YouTube. It's always delayed. Some of my videos get taken down. YouTube's been cracking down. Like, it's hard to make videos. I can't even put out all the best stuff that I got. I can't put it out. YouTube does not like the financial creators at the moment. There's a lot of stuff that you can't talk about. If it's an aggressive strategy where I made money, if I show the proof, YouTube doesn't like it. My videos have been taken down. I spent days making the videos. So if you want to see everything, now it's like, now you got to come on Discord. Like, you got to. YouTube's been cracking down, man. It's been tough. A lot of my best strategies can't even talk about them. It sucks. But look, position sizing, very important. When I make my trades, I tell my students right away, this is the position that you got to put on it. If the position is bigger than that, beware. That's a mistake. That's a mistake. I got 1.44% on Chipotle. I am down. I admit it. I'm down. I didn't make money on Chipotle. I have in my lifetime because I bought this when the E. coli outbreak happened years ago. I was in college. But lately, I'm down. I lost money. Honest truth. But do I think that this is a good value stock? I think so. My average cost is 39. I'm not that much down. Like, I'm in the vicinity to make the money back, right? I got 32 and a half covered calls. So it's an out of the money covered call. That's managing covered calls will be for definitely a separate video, not to make this too long. But I'm generating income, and I think Chipotle is a great stock because it has pulled back, but it has a very strong growth and has very high addressable opportunities because Chipotle is projected long-term to expand massively. So Chipotle is projecting long-term expansion of its restaurant count, which, by the way, came from management. They have cited a target of 7,000 locations. 7,000 locations in the US and Canada, and higher average revenue per unit over time, right? Everyone knows there's inflation. The price of Chipotle is going up. It ain't cheap. And a lot of people are cutting down because it's not cheap. It's not cheap. But the company's digital business and Chipotle pick-up lanes are actually growing pretty well. So in Q3 2025, digital sales were actually up about 37%. And it was sales in Q3 2025, digital sales are about 36.7% of total food and beverage revenue, which is pretty good because it's higher margin, it's more predictable, and it's way better for Chipotle. They have a strong brand and they have very good positioning in fast casual dining. So Chipotle's fast casual model, which is higher quality than typical fast food, quicker than full service, continues to be really awesome for people that are busy during lunch, for people that just want a quick meal, right? For date spots, whatever. This business is very strong because it's quick, it's easy, but it's not like super, super unhealthy like the fast food, right? So their menu and platforms are well known. They also have lots of different choices, right? So there's choices for keto, there's choices for high protein, for etc., right? There's many choices, which is very good because they can hit a very large part of the consumer. So the only thing that I have to mention is they do have slowing same-store sales, and they also have rising costs. Two things that are just not that good. So it's kind of a fight. It's kind of a battle for Chipotle, but where they're trading at right now, I don't think they deserve to be that low. Maybe they deserve to be that low right now, but in the future, I can see the stock becoming a $50 or $60 stock. In the macro environment, is pretty decent. Yes, consumers are pulling back on dining out, especially in fast casual, because the pricing is not so cheap anymore, right? When I was in America 6 years ago, I don't really go to America anymore. I spent a lot of time in Eastern Europe, in Dubai, and yeah, Eastern Europe, Dubai. I might go to Asia for a little bit here as it's getting very cold in Europe. But when I was in America, I remember Chipotle being $8.95, right? And I actually remember I was so broke when I was in America. I was in college and I had some money, but I was trading options and I really didn't want to pull anything out of my portfolio. It's really, really cheap. So, because, I didn't have much money or income and had to support myself and stuff like that. And I remember Chipotle being a treat for me at $8.95. So kind of like thinking about it for people, for an everyday person, if Chipotle is like $16, $17 now, I get it. That's like half an hour of someone's work on average. So it's not cheap. And that is contributing to some declining sales. However, if we look at Chipotle, let's go to the technical chart real quick. I'll just show you the technical chart of where it's been and where I think it's heading, and why I invested a good amount of money, $62,000 currently in Chipotle, is because, let's go to the chart here. Let's show you. Let's go to 6 months, okay? I'm going to show you something really, really interesting. It has had it's taken the elevator down twice, right? So it was looking pretty good here at 57. Basically earnings, big crush, investor lost confidence, took the elevator down, then took the stairs down. Took the dog for a walk down the stairs, right? Took the dog down for a walk on the stairs, and the dog said, I don't want to come home. I want to continue taking a longer walk, please. Owner's freezing, and investors are getting cold. They're getting cold feet. I'm like, this thing's not doing nothing. And that turned out to be a good reason because same-store sales decline. And I'm telling you, when same-store sales decline, again, I'm bullish on the stock, but I just got to point out the objective truth. When same-store sales decline, Boy, that's bad, right? Because on a long-term basis, if same-store sales are not growing, same-store sales means people are eating at that same location, not different location, that same location, then that could be a bigger structural issue, like a structural issue where just people are not liking the food maybe as much. That's a big issue, right? So is that true? It's hard to say, but same-store sales going down could be pricing, and that's fine. If you think about it, just one before we wrap up with the video and my thought process here on Chipotle, why it's a good purchase. Think about this. This is an extreme example. It's not going to happen. If Chipotle doubled their prices overnight, okay, and they went to $30 per bowl, which is extreme, and let's say that the brand loyalty that they have and the consumers like Chipotle so much that 20% of people stop going, but the price is doubled. Are they going to make more money? Answer is yes. Answer is yes. Is that going to happen? Well, that's obviously extreme, and that's going to be too high of a bump. But do you see the example I'm trying to make? It's really a fight for Chipotle. How loyal are the people, and how fast can they raise prices? And that's business for you. That's business for you. So same store sales going down, not good. But I'm just telling you, I do get it. I get it. It's because the prices are going up. And then yeah, now they had this other kind of crash here, and the stock is just kind of really hovering and kind of like flailing, like like a fish, like a Magikarp from Pokemon, right? It's like can't do nothing. Like it's like a Magikarp, right? Doesn't have any attack moves, right? If you play Pokemon, comment down below. I was kind of looking at some Pokemon videos, but the stock where it's sitting at right now, $32 per share. I think, man, we're going to be going up from here. $37 is the moving average, so I'm looking for a $5, $6 rise here. And that's no joke. $5 to $6 on a $30 stock. Do the math. Let's make some money. Bicep over tricep. See you guys in the next video.